Today, we're going to be discussing here with Daniel Sleep, CPA and certified tax strategist, about why most 7 and 8-figure entrepreneurs, solopreneurs are overpaying in taxes. So let's jump into it.
Awesome.
So, why do you think so many solopreneurs overpay in taxes, even at these high income levels?
Well, I think it's because their their core competency is not accounting, it's not tax. So, they probably see some things on social media on how to do specific strategies, but it's a very bird's eye view. And they know deep down they need to get an expert, but it's hard to find who to trust. And sometimes they may try to figure it out for themselves before they realize, no, my time is too valuable. I need to find somebody that will be able to implement and structure strategies that are legal, viable, and will reduce tax in an efficient way that will build wealth. But I think the hesitancy is it's just not their core competence.
Understood, yeah. So what are the biggest blind spots you see when new clients come in to
Uh,
work with you?
Biggest blind spot that we constantly see is just not having the foundations. So bookkeeping, that would be understanding your LLC and how it's taxed. That would be your reasonable compensation, whether your LLC is taxed as a C Corp or an S Corp. So a lot of those foundational stuff are boring, but they're so vital in order to be more tax optimal and optimize your tax situation overall.
Gotcha. What kind of financial habits or systems should they have in place?
You want to have some discipline with your cash flow, right? We have a lot of solopreneurs. I mean, they're not accountable to many people besides maybe a spouse or just fulfilling the work of their clients or customers. So a lot of times what we see is the cash flow, they distribute everything out. They don't realize how that can be detrimental to their situation. So I think it's a great habit to have just your cash in your business bank account for fluctuations in your business. I mean, it's the nature of small business, right? So good cash flow and being wary of lifestyle creep. As your business grows, you're gonna have more cash flow available to you, and it can be tempting to put all of that in personal use, but then your cash flow is not available to structure things better when it comes to your taxes and overall wealth. If we have a client that has good cash reserves, we know that they're disciplined and that they're prepared come tax time. Because a lot of times you use that cash flow and then you're most likely you have a CPA that comes to you and says, all right, I just prepared your taxes. You owe 76,000 in taxes. And they're like, I have 76,000. I don't have like 10,000 sometimes. And that can put you in a real bind. So you got to be prepared when it comes to your cash flow.